Good afternoon. We're getting right down to business here, doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3, and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide, KBC.com, and yes, of course, the on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Stocks closing out the week with a pullback from record highs heading into the three-day Labor Day weekend. Are you ready for it? The Dow slipped 92 at the closing bell, and the S&P 500 gave back 42 points. Both had started the day at all-time highs. The Nasdaq dropped 250 points today to close out a winning week and a winning month of August. In fact, after hitting record highs this month, the S&P 500 and Dow have wrapped up the month with gains of 1.4% for the S&P 500 and 2% for the Dow. The Nasdaq has wrapped up the month of August with a gain of 1.6% and its fifth straight winning month this year. The Russell 2K Small Cap Index also getting a lot of attention this year with a jump of about 6% for the month of August, and it looks like it's up 4 months in a row. That's the longest streak for the small caps in about 4 years. The inflation number rising in July, according to the Fed's favorite gauge of inflation, suggesting persistent price pressures tied to higher tariffs. But the increase is seen as not likely big enough to get the Fed to not cut rates next month. We'll talk more about that here coming up shortly. Also, the consumer confidence number declined to a 3-month low, according to the University of Michigan's Consumer Confidence Survey, suggesting consumers expect inflation to surge over the next year. I'll discuss the latest on the economy and business scene here in the Los Angeles area, including real estate, by the way, with prominent L.A. area economist Dr. Robert KLEINHENZ, principal at KLEINHENZ Economics, who will be joining me live later this hour. We'll also get an unvarnished view of what's really happening with business out there, especially small business and restaurants this afternoon with the awesome Angela Marsden, owner of the Pineapple Hills Saloon and Grill in Sherman Oaks, and strong voice for small business here in Southern California. The drama between the White House and the Fed continues, with the Federal Reserve Governor Lisa Cook and the Trump administration having their day in court today. All parties still have to wait longer for a ruling in the case that could have implications for the Fed's independence. It remains to be seen. The case could go up all the way to the Supreme Court. President Trump trying to fire Lisa Cook as Fed governor due to alleged mortgage fraud. And we're getting word that Spirit Aviation Holdings, the parent company of Spirit Airlines, filing for bankruptcy this afternoon for the second time in less than a year. The parent company of the ultra-low-cost Spirit Airlines tries to deal with a tough financial situation, trying to shore up its balance sheet amid challenges for budget air carriers. So that's big news in the airline business this afternoon. Spirit Airlines filing for bankruptcy again. If you're hitting the road, meanwhile, this year's Labor Day gas prices forecast to be the lowest since 2020, but not here. In Southern California, the national average, around $3.15 a gallon. That's the cheapest national average Labor Day has seen in about 5 years. But here in the Los Angeles area, gas and diesel prices are actually higher than a year ago. We'll take a closer look at that coming up here, too. Joining us live now, veteran market strategist, investment expert, Bryan Perry, editor of BryanPerryInvesting.com, author of the 25% Cash Machine. Bryan Perry, thank you very much for taking the call here on what's been a record-shattering week.
Good to be with you, Frank. Thanks so very much for having me. August proved to be a pretty good month here with new records for the Dow, S&P, and NASDAQ. Certainly, the big cap tech led the way, but financials also really showed up here in a big way as well. J.P. Morgan and Capital One being the standouts in that particular sector. Today was a day of somewhat of a give back here. We had a really good week leading up to today here, but the general lack of buy the dip interest was prevalent from the opening bell. But at the same time, again, closing out a good month and a good week on a high note here. NVIDIA this week really validated the AI trade as still being very vibrant here. The cap spend for massive compute capability continues on, and they basically are still trading at a relatively good value. A lot of people wonder about the valuation of NVIDIA here, but they're looking to earn $4.50 a share this year, $6.50 a share next year. That's a 40% increase in earnings per share, with sales expected to rise 31% from $206 billion to $271 billion. That's just amazing. But that's a forward PE of around 36 times. And when you've got 40% growth rate on your earnings with a 36 PE, forward PE, that's still relatively a fairly valued stock. It's not, super expensive by any means. So a lot of price target hikes this week here into the 220 range, fairly justified. So this is the most important stock in the market today because it is driving the whole AI experience trade. And following that, you've had other stocks really, come alongside and do very well this week. Just like Google, for instance, Alphabet trading up nicely here. And even on today's give back for tech, Google was trading higher, basically on a what looks like to be a lower fine for their advertising allegations, penalties over in Europe. And in addition, we've got also, these quarterly results, that were, if you miss, you really get hurt badly here, which took some of the luster off the AI trade today, which was Dell and Marvell, which pressured some profit taking here in the megatechs today. Caterpillar already is starting to see, signs of what the tariffs are going to bite into their foreign sales. Stock was down big today, and this is going to be something that's going to be a major talking point here during the third quarter here when tariffs really start to kick in. It's going to, affect certain companies. So mainly stock pickers market going forward here for a number of reasons. We're in seasonality here with September, which is historically a tough month for the stock market in general for equities. You got a Fed meeting coming up here and on the 17th of September, which puts that event really in the spotlight here of what's to come. And you've also got, basically a market here that's at 6,500, which is already at a year-end target for a number of analysts on the street. So I expect the market to churn here going forward for the month of September for the most part, and to see what the rest of the economic data has to lay out for us here, Frank. But it's generally a market here that still has a strong tailwind. The bond market was very favorable here. 10-year bonds are trading around 4.24, which is at the low end of the range, or the recent range. Dollars holding steady. The outlier is really gold and silver, which are trading at new record highs here late this afternoon. And that's just, normally when the market's in a good place like this, gold prices and precious metals prices are pulled back, but they're heading to new highs here. So we've got a different thing going on here than what is historically normal.
On there live with Brian Perry, editor of BrianPerryInvesting.com. Gold closing up more than $42 today at $3,516 and change. And silver has moved above $40 an ounce today, up $1.05 to $40.75 off its all-time high, which, of course, we haven't seen since, I believe, 1980, which was $50 an ounce back in those days. Silver has, though, moved above $40 an ounce in what's been a sizzling run for silver, and gold at a record high here at $3,516.40. Bitcoin, on the flip side, coming off its all-time high, which we saw a couple of weeks ago, above 124,000. Right now hovering at around 108,000. Ethereum, ETH, as we call it, at 4,348. Solana still above 200 here at 203. Doge at 21 cents. What are your thoughts here on the crypto moves here, which I know you also follow?
Yeah, very interesting with Bitcoin here, Frank. You've had a big sell-off here in what are called, sales by these original owners here, these whale OGs, or in slang, in the crypto world, they're original gangsters. So these guys own the Bitcoin in the below 100, maybe as low as $10 in some cases. So there was a massive outflow this week of some of these big wallets were getting emptied at prices in the upper $115,000, $120,000 range, which really started driving it down. And there was a big shift over to Ethereum also here. There's BlackRock shifted massive amounts of Bitcoin assets over to Ethereum. And there's Ethereum does have, a use case to it here. So they're starting to see more stable coin transactions and a number of other, blockchain transactions taking place on the Ethereum platform here, which is also helping Solana move higher as well here. So it's mainly a rotational shift that I'm seeing here in Bitcoin. I think Bitcoin will hold this low to mid 100 to 110,000, range, and then start to find itself again, its legs in here. But Ethereum looks like it may want to trade it got up to 4,800. It's now trading around 4,300. It looks like it wants to trend higher toward the 5,500, maybe 6,000 range in good time here. So you've got some shifting going on in the cryptos, but I still think that, in general, the flows are good. There's just generally strong bullish fund flows into both coins as well as other cryptos. And I still like Solana as a super use case type of crypto as well. At 209 here, it's off its recent high of around 260. I think that it's come up from around 145, but it looks like that's also something people should take a hard look at.
All right, what about the crypto-related equities? Bitmine, for example, that's the one that has heavy exposure to Ethereum, also Circle and Strategy and those kind of names.
Yep, I do like those here on pullbacks here. Now, this is Tom Lee's, the Bitminer BMNR. That's pulled back here. We've talked about that in the in the low 40s area. It's around 43.86 on the close here today. That's something people can take a hard look at in here. Certainly, MicroStrategy, which is now Strategy, MSTR, that's pulled way off the high. That was trading up around 440 now, down in the 330 range here. So that's definitely people should take a hard look at that. And when you look at Coinbase, also, I'm long Coinbase for accounts I manage and for the services I run. I think Coinbase also down here in the low 300 area is also a buy. So you're not getting too many of these opportunities when they come in. It's a good time to take a hard look at the exchanges as well as the assets that trade as ETFs and kind of continue to build your crypto portfolio here in high quality crypto assets.
Getting back to NVIDIA for a moment, had that big, that was the highlight of the week, the NVIDIA earnings news, but the stock pulled back more than $6 today, back to 174 and change. We have talked to NVIDIA bull Dan Ives this week on this program. If anyone wants to hear it, can bring it up on the Mottek On Money podcast at kbc.com. Where do you see NVIDIA stock go from here?
Well, I agree with Dan. I mean, he's a super bull on the stock, obviously, in the whole AI revolution. But the stock ran up relatively pretty good, going into the number here from around 155 to 180 prior to this. And a lot of channel checks were calling for a pretty good number here. So those numbers, it was a high bar for NVIDIA to clear coming into this earnings release here when the print on Wednesday. And, from here, you've got, a 50-day moving average coming in right at around 170.5, 171. So this pullback here, and I think it's going to hold technically extremely well here because, Jensen, the CEO, he not only, beat, on the top and bottom line, but raised guidance here and just talked about in the whole China, experiences has yet to happen as well here. They're going to be, now selling chips back into China. They've been cleared to do this, and that's not baked into the numbers here going forward, Frank. So that's a bonus, for the numbers going forward here. So I think that NVIDIA will consolidate here, put in a double bottom higher low formation, which is technically speaking a bullish pattern, and then start to make its way toward 200.
All right, and Apple also made that announcement they're going to be coming out with the iPhone 17. They set a date for that. Apple has seen a pretty nice rebound this month, pulling back only slightly today, down 42 cents at 232.14. What about Apple here?
I do like Apple here. I recommended it for one of my services today. I've been buying the leaps on Apple here. The iPhone 17 launch takes place at 10 a.m. Pacific Standard Time on September 9th. And which is being labeled as awe-dropping. So there's some rumors that, that's going to be a slimmer iPhone here. There's still a lot of rumblings about whether or not they're going to buy, Perplexity out there as their go-to AI generative language model here. So Apple's focused on integrating, a lot of things in this new phone here, and it's primarily an opportunity to showcase any further advancements in what is called Apple Intelligence, which is their AI arm, and how their features will be integrated into new hardware, Frank. So the report suggests that Apple is going to, put out a really good show. And I think that this is something where the stock here has started to turn higher here at this 232 level, and looks like it may want to make an effort to get back up toward 250.
All right, let me ask you the big question here while we have time, Brian Perry. Any specific places where you are putting money now and or taking it off the table?
Well, sure. There's plenty to do, certainly from the standpoint of technology. I've been buying some Micron technology this week, symbol MU. They're the leader in memory for data centers and mobile phones, smartphones, and just about everything else in between here. And they're a U.S. base, so they don't face any kind of tariff scrutiny here. Rubik is also RBRK is a cybersecurity company here, which went public here within the last year, and is they're going to be posting numbers here in the next couple weeks. Here, the stock is breaking out. TJX retailer, it's just broke out here too. They had solid numbers here, for a low-priced retailer here. They're really managing they're just executing so well, Frank. So TJX is a breakout stock. Also in the AI space here called SoundHound, SOUN, and they do voice recognition for restaurants and for automobiles and a number of other types of services. The stock trades around 13. It ran up to 17 on just ballistic earnings here, triple-digit growth in sales and earnings. And I think the stock pulling back here to 12 makes a really good entry point. We talked about Apple, been buying that, and also CoreWeave, which has been a really hot stock at the late. It went up to like 175. It's pulled back here. It's in 93, and now trades around 101. I've been picking some of that up there. They're a huge lessor of NVIDIA GPUs. So the two other companies like Microsoft, which is their biggest client. Coming off, I took up some profit here in Cloudflare, which is NET. Made a nice move higher here, as well as Cisco Systems here. Posted numbers here, good numbers, but not super impressive. So we took a trade there and booked a profit.
All right, the news this afternoon, Brian Perry, is that Spirit Aviation Holdings, parent company of Spirit, filing for bankruptcy again here. It looks like the stock had closed down 3 cents to $1.22. What's your reaction to that news, and what's your view of the airline sector here now?
Well, with Spirit coming off the grid, it really does help the other airlines here, and it solidifies the leadership companies like United and Delta, certainly, and maybe even for other people that are looking for a new name here, maybe look at SkyWest, SKYW. That's been a strong name here. It's performed extremely well. So I'm not a big fan of American Airlines here, but I think those three make a lot of sense for people looking for. It's a smaller industry now with Spirit coming off and going BK, but UAL and Delta look really good technically, and SKYW, which is SkyWest, looks like it wants to just move higher as well.
All right, and getting back to the banks for a moment, some record highs recently, right? Not a surprise when you see some of the major banks now charging $4 to get a $20 bill out of an ATM. Have you noticed the ATM costs have skyrocketed recently, or for some of them anyway? What about the bank stocks here?
Well, they made a big move. In fact, I was taking a little bit off the table here this last week here. The fintech companies are basically looking really good here, whether it's American Express or Visa, MasterCard, Capital One, JP Morgan. You've got Goldman Sachs also looking good. But yeah, the banks have made a big run. They've moved up in advance of this rate cut, this expected rate cut coming here, in anticipation of higher lending rates, a lot of mortgage refinancing, and those types of things. So and the fees, I don't know how they get away with these fees, Frank, but they sure do. And that's what's helping other banks like SoFi, which are just extremely, fee conscious and online. They don't have any brick and mortar. I own the SoFi for personally, as well as for accounts I manage, and I recommend it in the services that I also edit. SOFI is my favorite bank stock at this time, and I think that it moved up to 25 here. Hit 27, pulled back here in the last couple of days here. I think people should take a hard look at that. That is the millennial and Gen Z's favorite banking go-to situation, and I think it's also got more legs to move into the $30 range or higher here over the near term.
All right, and last but not least, Intel, that big story where Uncle Sam is taking a stake in Intel. We're all shareholders of Intel, it looks like now. Intel stock down 58 cents at 24 and change. What is your reaction to that big news that the Trump administration has taken a stake in Intel and looking to do other deals, possibly with defense names, but specifically on this Intel story here, what do you see ahead for Intel?
It's interesting because the CEO now used to run Cadence Design, very smart guy, and he's actually Malaysian. He's not Chinese, despite the fact that he was getting a lot of accusation that he had ties with the Chinese Communist Party. That's been kind of disproven for the most part, and I think that Intel is a good turnaround story here. They're going to get a lot of business from the government, I think, somehow, through whatever contracts that they're going to put together, as well as the onshoring of foundries. Intel has started down that road. They kind of took a U-turn and decided not to do it. Now they'll probably get back into it here with the government wanting more onshoring of chip manufacturing here alongside Taiwan Semi. But, $24 here, it's probably okay. I mean, if sometimes you just look at these things and you close your eyes and you go, it's too big to fail. And it's also with the government now going to just groove some business in their direction. It probably, and the CEO is also a very good CEO. So I think that people can take a look at it here, but you got to be patient. This is one that's going to require a lot of good news for this company here to move from 24 to 34.
All right, terrific, Brian. I could talk to you for hours, so unfortunately we have to stop there. Brian Perry, veteran market strategist, investment expert Brian Perry, editor of BrianPerryInvesting.com, also author of the 25% Cash Machine. You're a prince, Brian, for wrapping up this big week ahead of the 3-day holiday weekend. We wish you a great weekend, and thank you very, very much for joining us live here this afternoon.
Of course. Thank you so much, Frank, and happy Labor Day to everybody.
Thank you. Thank you very much. And out to the freeways now here on 790 KABC. Mottek On Money continues, 790 KABC. Good afternoon. Stocks pulling back from record highs to close out a winning month of August. The Dow down 92 points off its all-time high, closing at 45,545. The S&P 500 started the day at an all-time high, closed down 42 at 6460. The NASDAQ down 250 points at 21,456. Winning month for the major stock market averages, and gold has popped to a record high close today, up $42.10 to $3,516.40 an ounce. And silver has seen a $1.05 pop today to $40.75 an ounce. Crypto is coming under pressure this week after Bitcoin hit a record high in the last week or so, above 124,000, now back to 108,248. Ethereum, ETH at 4,348. Solana at 203, and Doge at the moment at 21 cents. Heading into the Labor Day weekend, nationwide, the average price is at a 5-year low for gas, but here in the Los Angeles area, prices actually higher than they were a year ago. Regular gas averaging $4.61 a gallon. In the L.A. Long Beach area, $4.99 the average price for premium, and diesel at $5.13. And now the latest news on 790 KABC.
Welcome to NFL Flag.
Are you ready?
No matter who you are, lace up your cleats, smear on your eye black, step out on the field and chase something. Chase a goal.
Let's get it.
Chase the big time.
Get that, ladies.
Chase rings. Chase gold medals. Chase all of it. It's all up for grabs now. NFL Flag. Chase something. Visit NFLflag.com to find a league and start the chase today.
Hey there. I'm Paula Pant, host of the Afford Anything podcast. I help people make the smartest money decisions possible because, let's face it, money's too important to wing it. From investing strategies to economic trends to savvy travel, lifestyle design, and beyond, we're in this journey to financial independence together. Remember, you can afford anything, just not everything. So, afford anything. Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KABC. Let's get right back to business here. And the latest readings on the economy, a key measure of inflation up in the month of July, suggesting persistent price pressures tied to higher tariffs. But this latest increase in the PCE index, the Personal Consumption Expenditures Index, which we're told is the Fed's preferred inflation gauge, of 0.2% in July and now 2.9% in July, to the highest we've seen in February. Not high enough to dissuade the Fed from cutting interest rates next month. We're keeping an eye on that. Also, a new reading on consumer confidence today, declining to a 3-month low, according to the University of Michigan's authoritative survey. Meanwhile, housing prices, well, unaffordable for the most part here, but it looks like there are some cracks in prices, according to the latest Case-Shiller Price Index. Let's bring in prominent L.A. area economist Dr. Robert KLEINHENZ, principal at KLEINHENZ Economics, to discuss all this with us here now. Dr. KLEINHENZ, thank you very much for taking the call here this afternoon.
Thanks for having me, Frank. Good afternoon.
Wonderful to have you with us again. Give us your gut feeling on this economy here based on the latest readings we saw recently on jobs and now inflation and consumer confidence.
Well, so as I look at the high-level indicators that tell us about the national economy, the economy looks like it's okay. In terms of the unemployment rate, it's 4.2%. It's still below the benchmark 4.4 that I look at. It's in terms of GDP, we just got a reading yesterday that showed a 3.3% quarterly growth figure. Yes, inflation, as you pointed out at the outset, is up somewhat, but it's low by historic standards, but it's above the target inflation rate that the Fed has established. But when you look at these things in the aggregate, the economy is, and by the way, the job growth in the U.S. economy is still above normal, above its long-run average. So in a way, I don't see a lot of urgency on the part of the Fed to cut interest rates at this time.
All right. What about the impact of tariffs? We did see the Port of Los Angeles. We had the port director on this program earlier this week talking about record volumes at the Port of Los Angeles, the highest in the port's more than 100-year history. It looks like there was some front loading of shipments ahead of tariffs that could be coming down the pike here. What do you see ahead on the tariff front and the potential impact?
Yeah, well, and then we just heard today that the tariffs have been at least tentatively ruled out of bounds, if you saw in the news, I'm sure. So, there's a new development every day as it relates to tariffs. Let's keep in mind that the idea behind trade is that it's mutually beneficial. So that's why free trade was, fairly effective over about a 20-year time period. And then it was the pandemic and other similar events that caused us to think twice about that, stretched supply lines and so on. But so in terms of the impact on the local economy and the national economy, tariffs are going to maybe take the edge off of GDP growth, but it's not necessarily going to tip us into recession. Tariffs are going to increase inflation somewhat and increase the price level somewhat, but imports only account for about 11% of the economy. We're mostly a consumer economy that buys services. So we're going to see price hikes that are going to affect individual products more so than across the board. So the idea that inflation is going to perhaps tip the balance and tip the economy into recession, the tariffs will tip the economy into recession, I don't think that's going to happen. Locally, we've seen, some pretty wide changes and swings in the level of business at the ports. And I think the second half of this year, we'll see things slow down some. A lot depends on, the busy season for the ports really came and went. Maybe we've got a few more weeks left. Remains to be seen how the year's going to end up. I think we might see weaker port activity as we get to the end of the year.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KBC. And you're right to point out that appeals court ruling that our news department has covered, the U.S. Appeals Court ruling that most tariffs issued by President Trump are illegal, setting up a potential legal showdown now that could upend his foreign policy agenda. The ruling will not take effect until the 14th of October, we understand, to give the Trump administration time to ask the Supreme Court to take up the case. So this ruling affects the president's reciprocal tariffs, as I understand it, imposed on most countries, as well as other tariffs which impact China, Mexico, and Canada. So we will keep an eye on that one, but thank you for highlighting that. What about on real estate? You were the former deputy chief economist of the California Association of Realtors, and it was always an honor to be at various forums with you on that subject. If you can put your real estate hat on for just a moment, we did see some prices moving lower based on some readings in the latest Case-Shiller Home Price Index. Give us your view of what's happening on the real estate front, especially as it's impacted by the horrific fire tragedy that we saw this year.
Yeah, this has once again been a very difficult year for the residential market. Very much a mixed picture in the Southern California region, with home prices not moving a whole lot relative to last year, down a little bit relative to the previous month. I'm looking at July numbers right now. And sales have been mixed, but mostly down. But when you have so many things working against the housing market, this shouldn't be a surprise. Interest rates have been high by recent standards, not by historic standards, but it's the recent interest rate history that would-be buyers have in mind when they consider buying a home. Supplies of homes have also been quite limited. The supply of existing homes is still not a whole lot above where it was in the last year or so, which has been lean. And then we just haven't had a lot of new home production. So if you take a look at permits across the state so far this year, I think they're up through June, maybe by 1% at best. And then locally, they're also up only a bit in the Inland Empire. They're up 14.5%, but they're down in LA and Orange County. So these kinds of things keep upward pressure on home prices, assuming people can afford those interest rates and down payments. And I don't see us getting much relief. Sales are down, and many of these things that I've already mentioned are contributing to the weakness in sales that we've seen so far this year, as well as last year.
Prominent Los Angeles area economist Dr. Robert KLEINHENZ, principal at KLEINHENZ Economics. Robert, thank you very much for taking the call this afternoon. It's always great to speak with you, and look forward to seeking your views again very, very soon. We wish you a wonderful Labor Day holiday weekend.
Thank you.
Out to the freeways now, 790 KBC.
Michael Rosenbaum and Tom Welling take you behind the scenes of one of the greatest shows of all time.
Welcome to oh God, I can't even get it going. Welcome to Talkville, folks.
Where it's fun to talk about Smallville. I don't think you really know what you're doing on a television show until you do a podcast about it.
I've learned so much.
So what did we do again? I don't know. Let's rewatch it and do a podcast so we know what we did.
Talkville, the Smallville Rewatch podcast.
Let's get into it.
Follow and listen on your favorite platform.
Mottek On Money continues, 790 KBC. Now let's get right to the heart of business here. Get an unvarnished view of what's really happening with small business here in the Los Angeles area with the awesome Angela Marsden, owner of the Pineapple Hill Saloon and Grill in Sherman Oaks. Also, small business advocate who, of course, spoke out big during the COVID lockdowns and outspoken since then, too. Angela Marsden, wonderful to have you with us here this afternoon. How are you doing?
I'm doing good. I'm doing good. I mean, I'm managing through this summer. It's been crazy for the small businesses. I mean, I don't know. I'm sure everybody knows what's going on, but definitely business has been very, very slow since the fires, and then since all the violence that broke out in downtown. That downtown area has been really, really affected. But I've talked to even auto body shop owners that have been around for 40 years, and they say that this is actually worse for them than COVID this summer. That's how bad it's been. It's been absolutely crazy. Everybody's doing their best to survive. You know, I just want to give people some information. And then, I don't know, I want to bring up the Bed Bath & Beyond thing. Is that okay?
Yeah, of course. Go right ahead.
Great. So, you know what? First, I want to give you guys a little bit of information on the restaurants. I think this is really, really important, especially your mom and pop restaurants. Please go and, be patient when they don't have a lot of service, because they have to service it short because of labor costs. And everybody is really down right now, and they need your hug. They need to see your smiling face. And we want to keep them going because we don't want to be all corporate chain restaurants. But right now, as far as Los Angeles goes, we're losing one to two, on average, 2 restaurants a week are going out of business. Sometimes when it's like a spike, it could be 3 a week. That's how bad it is. And that's just on the restaurants, okay? So I just want everybody to understand, when they pass the $20 an hour for the minimum wage, which we talked about a lot, and I have said over and over again, we have a city council that does not even ask you what your budget is and how many hamburgers you can sell. They seem to just pass laws, and you're supposed to have the money to do it. Well, one of the losses that are coming up, and the data that's showing up from this great, we're going to raise fast food minimum wage, and we're going to oversee it, over regulation. That's what Gavin Newsom loves, right? We've lost around 4,477 jobs in Los Angeles alone since AB 1228 has been passed. I'm so sorry. The statistics have come out since that law has been passed that for California, we've lost roughly 36,565 fast food jobs are gone. These are the low-income people. These are the single mothers. And that is, if you think about this, so In-N-Out is paying $22 an hour. How am I supposed to pay my kitchen staff $22 an hour when they have to know how to really cook things? And so this is a scale of overregulation, Gavin Newsom and all these policies that he's done, and how it's completely destroying the jobs and the businesses in LA. And Bed Bath & Beyond was, obviously in the news for a little bit. I wish it was in longer. I want to say Marcus Leonis. Is that
Marcus Lemonis. Right, he's the chairman of Bed Bath Beyond and Home, as it's now known. He was the one that recently announced that they will not be reopening its physical stores here in California because of the state's overregulation and cost of doing business here.
Right. I want to put out a few things. I have a few thoughts about that. Number one is, yes, Bed Bath & Beyond was a big corporation, but there is a brick and mortar model. And if it can't survive, it can't survive. And I want to commend him, in and out. Her family, she's leaving the state. She didn't say she's closing on the restaurants, but we need big people like that to stand up. And he really put it out there as to why. It's the same things that we've been talking about: overregulation, high rents, frivolous lawsuits, the minimum wage. And I think it's amazing that he did that. But Governor Gavin Newsom's response on X to that was, I'm going to quote what he said: after their bankruptcy and closure of every store, like most Americans, we thought Bed Bath & Beyond no longer existed. We wish them well in their efforts to become relevant again as they try to open a second store. So this is completely insane. So this gentleman is trying to open a conversation, which actually is very relevant to small businesses too, and get the governor to engage in maybe problem solving. And instead, he gets a snide answer like that. And I have put this out here before. So they were never a big Trump supporter. So what they're saying now is they make $1 billion online. They're going to service everybody online, but they're going to close their brick and mortar shops, right? They are a big corporation. If their shops cannot make money, they close them and they go online. Your mom and pop shop, you're like Pineapple Hill, I can't do that. Casa Vega, she can't do that. And the little small businesses outside of restaurants, they don't even keep really track of how many are closing, Frank. They literally look at businesses opening, but they don't have clear stats on the smaller businesses, like the small clothing shops and things that are closing either. And the businesses are closing at high rates. And I want to commend him, first of all, for saying that. But on the other hand, it's like I was telling you with fast food. They're going to put AI in and remove people. That's what they're going to do, or they're going to leave California. And I just hope and pray. We have a governor's race. I just hope, and a mayor, I hope people vote differently and give someone else a different chance, because we need a revitalization in LA, in California too, but definitely in LA. You figure they've destroyed the restaurant jobs, but then on top of that, they've destroyed the entertainment industry. So what industry do we have left? What is left in LA? And I just wanted to get on today, and I wanted to the other thing that I found very interesting, I just want people to have this knowledge if they don't already, is let's see what California is number one in under Gavin Newsom. We're number one in poverty. We're number one in homelessness. We're number one in population loss. Number one in gas prices. Do you know my gas is through the roof, and I don't even use a lot of gas at my restaurant.
Angela, wish we had more time. Totally on point as always, and thank you for laying it on thick and telling it like it is. The awesome Angela Marsden, the owner of Pineapple Hill Saloon and Grill in Sherman Oaks. We wish you a great Labor Day holiday weekend, Angela, and hope to speak with you again very, very soon, live on the air on 790 KABC.
Jim Rome takes on sports.
Why? Because you're not playing me.
With rapid-fire takes.
Y'all went from the Super Bowl straight to the toilet bowl. He's not over the NFL. The NFL is over him.
Scorching debates.
All the good, all the bad, all the ups, all the downs.
He's the Spitfire of sports smack.
Sorry for what I said, because it was appropriate when I said it, but I can't say it anymore, dude. You are killing the game.
The Jim Rome Show podcast. Follow and listen on your favorite platform.